Hey, good morning, everybody, and welcome to On the Open here, taking a look at the U.S. markets here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. It has been quite the morning. We saw the overnight action mixed in Asia. You're watching Europe basically trading a little bit lower after the ECB holding rates firm, and they're going to continue to infuse capital into and inject capital into the system at 80 billion euros per month right now. The anticipation is that they're going to taper that back to 60 billion as of April 1st, but they're going to continue the program as far as capital infusion through 2017. That had German bonds, French bonds, and UK bonds all moving to the downside. But the story continues to be the crude markets. If you didn't hear about it or if you didn't see it, the crude markets basically plummeted yesterday. You can see right now that the WTI contract, the light crude oil futures, trading down this morning again, 50 cents. It has broken below that $50 level. We talked about this really close. We talked about this where a break right now of $50, that's going to put that $48 range, $48 to $50 range now on the radar. And we're in that area. Dollar strength has backed off, so you don't have that pressure right now of the dollar dragging down the commodity contract right now. But there is just such a huge glut of both crude here in the United States as well as the Brent oil, which is primarily what is in the Middle East and Africa. You're seeing that down about 5% this morning. That drop after we continue to see that there is concern that the production cuts aren't going to be adhered to. Not only do we have increased shale production here in the United States, those rigs have been pumping and increasingly get online while we have $50 oil. But Brent also has been moving to the grinding, broke through its 20 and 50-day moving average this morning. That is extremely bearish right now, and they're now looking at challenging that 50-day moving average of right around $50 on Brent, which is that more heavy oil contract. Taking a look at the markets, we see that the Dow Jones right now is up 13.5 at 20,869. You can see that it's still holding up and actually consolidating at these levels. I'm not completely. I could see the action now starting to consolidate right around that 20-day moving average. We're going to watch the level of 20,700. That's going to be a break point for the short-term bulls on the Dow Jones. A break of there is then going to be that challenge area, basically between 20,700 and 20,300. That's going to be the area that anybody that's been sitting on the sidelines, if they have an inclination that they want to start building or adding to positions in the Dow 30, that's going to be the area that they're going to be looking at. The S&P 500, taking a look at that, you can see that it is in the green right now, up about 2.5 points at 2365.50. Again, holding above that 20-day moving average. We've had the earnings cycle basically flow through. We're starting to get some data out. Obviously, we saw an ADP number that was off the charts, but crude and that drop in crude has basically put a lot of people sitting there scratching their heads going, if we have such a huge glut of this commodity that really is a decent barometer of growth, do we need to start rethinking things? Or, more importantly, does the administration and Congress need to start acting as far as actual policies? They need to get healthcare through. They are going to need to get this infrastructure plan out there and in the markets. Otherwise, you're going to start to see that people are going to either trim up some profits or they're going to start to anticipate that maybe these factors that we thought were going to be so bullish aren't going to happen, A, at the pace that they anticipated, and B, maybe not at the scale. Taking a look at the more domestically sensitive and centric Russell 2000, that right there is the story. You can see that as of the last 3 sessions, it broke the 20 and 50-day moving average. These are the most sensitive to domestic policies, whether it's tax reform, infrastructure plays, healthcare. These are the small businesses here in the United States that are looking to benefit from the new policy changes, both in trade, tax reform, and so forth. That broke down yesterday, and the catalyst also was oil. The fact of the matter is that this precipitous drop in oil, again, has people looking at this going, unless these policies start to get in play, this move that we saw post-election, these small caps have been grinding in a consolidation. We're going to watch this. Watch right now the 1385 level on the Russell 2000. It needs to get above 1385 and 1370 with some conviction. 1370 means that we're going to start to see some sideline money potentially flowing into the small caps. These are the areas right now that need to be held. Otherwise, you could see a challenge of that 200-day moving average at 1267, which is about 100 points away. And where you're going to see that action start to come to fruition is going to be in the bonds. Today, right now, we see that the bonds are moving to the downside. As a matter of fact, you see that the 10-year is now down about 5 ticks. Put that in context, you're starting to see that the yields on the 10-year are moving to the upside. As a matter of fact, you have the 10-year yield now up at 2.58%. That is a positive and a catalyst for the equity markets here in the United States. That money could be rotating into the markets. And when you take a look at the 30-year, 30-year is down about 11 ticks at 96.22. Watch this one very closely. The yields right now on the 30-year are trading right around 317, so 3.17% on the upside. We have the FOMC meeting next week. There's basically about 100% certainty, well, let's just say 99% certainty that they're going to raise rates, especially after an ADP number that was off the charts good at 298,000 jobs added. You have claims that came in right about at consensus, and you also are seeing, or it was right around 243,000, and you now have the remainder of the jobs data as well as the average wage growth. Watch that number closely. We did see that wage growth increased in Japan. That was a catalyst. The Japanese markets were actually up on that note. So we're going to watch that wage growth. I want to watch that number very closely because that's going to be a good barometer of how small businesses and just people in general are doing here in the States, because the consumer is one of the biggest catalysts here for continued upside movement. All right, folks, finally, watch volatility. All right, taking a look at the VIX right now. Volatility is, and I'm actually going to be, I want to change this real quick to remove it from percentage and actually look at the price action. Volatility right now is at that 12 level. It's been trading, bouncing off 11. It's trading at 1190 right now. It's challenging and now above that 20-day moving average. It needs to get above the 50-day moving average at 1194. We want to see this thing over 12 if we're going to see some volatility in the market. For options traders, this has been the most frustrating environment right now as far as volatility is concerned. It's been extremely low, historically low, and bouncing off of these areas. We want to see some action here and get this rotating up. That means that we can start positioning, even if you're and especially if you're bullish, bearish, or neutral. This is going to give you some optimal opportunity with more vol in the markets. All right, folks, that's it right now for On the Open here at MarketStream.live. Join me at 1:30 Eastern Time. I'm going to be talking about a strategic approach that you can utilize for building up bullish and bearish positions, fixed risk. We talked about the calendar spread yesterday. Let's be a little bit more short-term directionally biased. If you're looking for a swing trade, maybe in the next 20 to 30 days, this could be a great strategy for you to take a look at. We'll be talking at 1:30 Eastern Time here at MarketStream.live. Take care.